जब चाहो तब अपना पैसा निकाल सकते हो
और रिटर्न भी देता है।
बिल्कुल।
तो आज का किस्सा निपट जाए तो सबसे पहला काम यही करूंगा।
और आज के लिए मैं तेरा लिक्विड फंड बन जाता हूँ। दोस्त भी तो लिक्विड फंड की तरह ऐसे ही मौकों पर काम आते हैं।
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
What are tax saving schemes? These are schemes that help an investor save on taxes. Tax saving schemes offer tax rebates to the investors under specific provisions of the Income Tax Act 1961, as the government offers tax incentives for investment in specified avenues. These schemes are also known as equity-linked saving schemes or ELSS. The investment in these schemes has to stay for a minimum period of 3 years from the date of investment. These schemes are growth-oriented and invest predominantly in equities. The growth opportunities and risks associated with these schemes are like those of any equity-oriented scheme. Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing.
The race before it even started. And as time passes by, the gap between your investment growth and cost increase due to inflation will only widen. If you still don't believe in the power of inflation, take a look at these numbers. Experience may have taught you that tasks done in a planned, disciplined and systematic manner always deliver the best results in the long term. Well, wealth creation requires pretty much the same principles. It's all about systematic investment planning and maintaining that disciplined approach till you achieve your desired result. Use the power of compounding to your advantage. If you save a small sum of money regularly in an equity mutual fund, your money will work with greater power and it will significantly impact your wealth accumulation. That's the underlying principle of the power of compounding. But you need to start now. Even a seemingly small delay of 5 years can cost you the crorepati tag. Let me illustrate how. If you make a monthly investment of Rs 5,000 for a period of 15 years, you will have invested the sum of 9 lakh rupees. At an annualized return of 18% per annum, this 9 lakh will have grown to 45.96 lakh. Let's look at another scenario. If you invested the same 5,000 rupees every month over a period of 20 years, you will have invested a sum of Rs 12 lakh. At an annualized return of 18% per annum, this 12 lakh would have grown to, guess what? Rupees 1.17 crore. Therefore, that extra thing, you need to select a longer time period. For example, if you are starting a SIP to build a retirement corpus, you should select a period which is equal to the number of years that are left before you retire. Step 4. Decide on the frequency. That is to say, do you wish to opt for a monthly or quarterly SIP option? We recommend a monthly option. As if the power of compounding wasn't enough, investing with the help of SIPs also offers you the additional benefit of rupee cost averaging. Simply put, you buy more units at lower prices and less units at higher prices without having to track the market every day. So how does rupee cost average? This is how. Invest gets converted into units depending on the net asset value of the scheme you have invested in. NAV is the market value per unit of a fund. If the NAV in the first month is Rs 20 and you have invested Rs 2,000, you will get 100 units. Similarly, in the next month, if the NAV is Rs is a one-time instruction on your part, which will be followed till such a time that the lump sum investment within your income scheme has been depleted. Or, you have instructed us to switch your investments into another equity scheme from within our basket of schemes. You can download our SIP calculator on your mobile phone. Just SMS SIP to 922 317 9333. You can also follow us on Facebook to get regular updates on DSP BlackRock mutual funds. Thank you for spending this time with us. We hope that you've enjoyed our presentation that's helped you understand systematic investment planning a bit better. Have a great day and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing. How convenient is it to invest in a mutual fund scheme? Investors can contact their financial advisor for necessary information and application forms. Forms can be deposited at the collection centers through the distributors who provide such services. Investors can also visit the AMC's sales office, registrars and transfer agents or investor service centers and deposit duly filled application forms. Most AMCs today also offer an online transaction platform which enables investors to complete their investment on the internet without any physical application forms. Investors should note that there are cut-off times for transacting in any mutual fund scheme, and the applicable NAV is dependent on the time at which the transaction is recorded. For example, if on January 1st you invest in DSP BlackRock Equity Fund and submit the application form before 3 p.m., which is the cut-off time for DSP BlackRock Equity Fund, the applicable NAV will be as of January 1st. If, however, this transaction is recorded after 3 p.m., the applicable NAV will be that of January 2nd. Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing. What are the different types of mutual fund schemes? There are several ways to categorize mutual fund schemes. Let's check out a few of them. First of all, schemes can either be classified as open-ended schemes or close-ended schemes. What is an open-ended fund or scheme? An open-ended fund or scheme means that it's open for business on all business days. You can invest or withdraw your money on all business days. Liquidity is the key feature of open-ended schemes. And what are close-ended funds or schemes? Close-ended funds or schemes have a stipulated maturity period. Example, 3 months, 6 months, a year or more. Unlike the open-ended funds that's open for business on all business days, close-ended funds are open for purchase only during the initial launch and for redemption at specified periods of time, either immediately post-launch or later, depending on when the AMC specifies. Mutual fund schemes can be classified according to the investment objective. Such schemes may be open-ended or close-ended schemes, as described earlier. Let's take a look at some variations. Equity funds. The aim of growth funds is to provide capital appreciation over a medium to long-term period. These funds invest in equity shares of companies and therefore offer the investor the potential for growth. Such schemes invest a major amount in equities. Equity schemes are suitable for investors having a long-term outlook, seeking appreciation over a period of time. Balanced funds. The aim of balanced funds is to provide the benefits of investing in both equities as well as debt securities in the proportion indicated in their offer documents. These are appropriate for those investors who are looking for growth without taking too much risk. These funds are also affected because of fluctuations in share prices in the stock markets. However, NAVs of such funds are likely to be less volatile compared to pure equity funds. Index funds replicate the portfolio of a particular market index, such as the BSE Sensex, S&P Nifty, etc. This makes tracking your investments simple and easy to understand. NAVs of such schemes would rise or fall in accordance with the rise or fall in the index, though not exactly by the same percentage due to some factors known as tracking error in technical terms. Necessary disclosures in this regard are made in the offer document of the mutual fund scheme. Income or bond funds. Income funds invest in debt securities such as bonds, corporate debentures, government securities, and money market instruments. Such funds are less risky compared to equity schemes. These funds are not affected by fluctuations in the equity markets. However, opportunities of capital appreciation are also limited in such funds. Income funds are generally preferred by individuals with a low risk profile. Money market or liquid fund. These funds are also income funds, and their aim is to provide easy liquidity, preservation of capital, and moderate income. These schemes invest exclusively in safer short-term instruments such as treasury bills, certificates of deposit, commercial paper and CBLO, government securities, etc. Returns on these schemes do not fluctuate much compared to other funds. These funds are appropriate for corporate and individual investors as a means to park their surplus funds for short periods of time. Gilt funds. These funds invest exclusively in government securities. Government securities have no default risk. NAVs of these schemes also fluctuate due to the change in
आप तो डरा रहे हो।
ना ना बता रहा हूँ, क्योंकि तुम्हें शादी से पहले घर लेना है और इसके लिए पैसे बचाने पड़ेंगे। न सिर्फ बचाने पड़ेंगे बल्कि इन्वेस्ट करने पड़ेंगे। आज मेरे पास सीमा भी है, घर भी, कार भी, और ये घड़ी मैंने लंदन से ली थी।
अंकल 2-3 हजार बचा भी लिए तो उससे क्या घर आएगा?
2-3 हजार कम होते हैं क्या? शुरू तो करो।
बट इन्वेस्ट कहाँ करूँ?
तुम शेयर्स, बॉन्ड्स, डिबेंचर्स, गोल्ड, इन सब में इन्वेस्ट करो।
अंकल इन सब के बारे में तो मुझे कुछ भी नहीं पता।
इन सब में इन्वेस्ट करने का आसान तरीका है म्यूचुअल फंड्स।
मतलब?
तुम्हारे और मेरे जैसे लोग जब म्यूचुअल फंड में इन्वेस्ट करते हैं, उस पैसे को फंड हाउस स्कीम के इन्वेस्टमेंट ऑब्जेक्टिव के मुताबिक अलग अलग कंपनी के शेयर्स, बॉन्ड्स, डिबेंचर्स वगैरह वगैरह में इन्वेस्ट करते हैं।
बट अंकल ये सेफ तो है?
म्यूचुअल फंड स्कीम्स को प्रोफेशनल्स मैनेज करते हैं। इनकी कोशिश ही यही रहती है कि आपकी रिस्क कम करें और अच्छा रिटर्न दिला सकें।
तो अंकल देखा जाएगा, लगा दो दाव।
अरे हीरो, यहाँ बात मरने मारने की नहीं है, इन्वेस्टमेंट की है। तो हमेशा सोच समझकर, और जब रिंकी के पापा को पता चलेगा ना कि तुम ये सब कर रहे हो, ये खुद तुम्हारे घर आएंगे बात करने के लिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing.
Why should we invest in mutual funds? We all save money. But then, a question comes to our mind. What do I do with the money? How can I get the maximum benefit out of it? After all, we worked really hard for it. We ask our friends and colleagues about where to invest. Well, some will say fixed deposits. Some say buy an insurance policy. But are these the best options we have? You see, with price rises and inflation touching the roof, how will your dreams like buying a car or going on a holiday ever become a reality? Mutual funds, trust me, is the answer. Now you see, when we hear about this mutual funds, it sounds very complicated. We think about filling forms, reading boring bank brochures, going through complex calculations, stock markets. It is simply not everyone's cup of tea. That is where mutual fund experts come in. Like most investors, you may have more interesting things to do in life, like say, going to a movie or a weekend trip. So leaving investments to the experts is a practical and logical idea. After all, they are the experts. Now you may ask, this is just a myth. There are mutual fund investments for the junior-most guy in the office to the big entrepreneur. So no matter how much you earn or what your risk appetite is, there is a plan for all of us. You could invest in low-risk products like cash and liquid funds. which have potentially steady returns. Or invest in high-risk products with potentially high returns. For your short-term goals like a foreign holiday or a car, there are debt funds. For long-term goals like your own house or daughter's marriage, there are equity funds. So you have a wide range of investment choices. So now you may say, this is a great idea, but what about the charges? I mean, they are mutual fund experts. The good news is that the charges are very low. Since a professional is managing a large pool of investors like you, the cost that you pay for a professional manager is shared and very small compared to the other investment options in the market. On top of getting good returns for your money, you can also avail long-term tax benefits. This is one of the greatest benefits of this investment. So in all, easy liquidity, diversification, regulated by SEBI, mutual fund is for everyone. Wide investment choices, low charges, long-term tax benefit. All these factors make mutual fund a very practical investment you should seriously consider. It is the stepping stone to your dream. So set your goals and start investing today. You are much closer to your dream than you think. To invest in mutual funds, call your financial advisor now. Call toll-free 1-800-226622 or visit us at www.idfcmf.com.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello everyone. Let me begin with the Monetary Policy Committee decision which voted in the favor of a status quo, and that was unanimous in nature. This was largely in line with market expectations. So what did change was the reverse repo rate, which was increased from 5.75 to 6%. So effectively it means that the corridor between the repo and the reverse repo, which was at 0.5%, now stands at 0.25%. Why was this required? Couple of reasons. A, the overnight rate, which is the rate which the bank transactions happen, had gone way below the repo rate and was trading at around the reverse repo. Inflows by FIIs both in the equity and the fixed income markets. In fact, in the first 2 working days of April alone, we've seen approximately 10,000 crores of FII flows into the bond markets. This, I believe, will keep the yield rise under check with incremental buying coming in from foreign investors as also some investors in the domestic segment. What should
There once was a poet who fell upon such hard times that he was no longer able to feed his family. So he decided to set out for the palace and appeal to the generosity of the king. Upon being summoned by the king, he started reciting his poems.
Wow.
The king, well pleased, asked him to name his reward. Pointing to the finely wrought chessboard, the poet said, "Your Highness, if you place just 1 grain of rice in the first square and double it for every square, I will consider myself well rewarded." "Are you sure?" asked the king. "Just grains of rice and not gold?" "Yes, Your Highness." "So it shall be." So the courtiers started placing the grains of rice. 1 on the first square, 2 on the second, 4 on the third, 8 on the fourth square, and so on. By the time they came to the 10th square, they had to place 512 grains of rice. By the 20th square, the number swelled to 5,24,288. When they came to the halfway mark, the 32nd square, the grain count was 214 crores, 74 lakhs, 83,648. Soon the count increased to lakhs of crores. Eventually, the hapless king had to hand over his entire kingdom to the clever poet. And it all began with 1 grain of rice. Moral of the story? Never underestimate the power of compounding. If you systematically invest a small sum every month, your SIP can grow to a very impressive sum when you retire. Sundaram Mutual, unearthing opportunities. Mutual fund investments are subject to market risks. Please read the statement of additional information and the scheme information document carefully before investing.
टिंटू, अलमारी के ऊपर से ब्राउन वाला बैग निकाल दो।
ये तो बहुत ऊंचा है। मुझे ये क्यों बोलते हैं जबकि पता है कि मैं छोटा हूँ। मैं ही क्यों फंसता हूँ ऐसे चक्करों में।
बैग निकाला क्या?
पापा ये सही किया, ये लैडर सही है।
चिंटू के लिए बैग निकालना उतना मुश्किल नहीं था जितना वो सोच रहा था। थोड़ी समझदारी एंड छोटे छोटे स्टेप्स आपको मंजिल तक पहुंचा देते हैं। कहते हैं ना, द जर्नी ऑफ 1000 माइल्स बिगिंस विद 1 सिंगल स्टेप। इसी तरह SIP के जरिए छोटे छोटे स्टेप्स लेकर फाइनेंशियल गोल्स अचीव किए जा सकते हैं। SIP मतलब सिस्टमैटिक इन्वेस्टमेंट प्लान। एक बार SIP रजिस्टर करने से हर महीने आपके बैंक अकाउंट से फिक्स डेट को फिक्स अमाउंट म्यूचुअल फंड में इन्वेस्ट होता जाता है। इससे डिसिप्लिन वे में आपका इन्वेस्टमेंट तो होता ही है। क्योंकि ये इन्वेस्टमेंट मार्केट लिंक्ड होती है, इसलिए मार्केट के उतार चढ़ाव के बीच आपका इन्वेस्टमेंट एक एवरेज कॉस्ट पर होता है। तो अब बड़े सपने देखो, चाहे छोटे स्टेप्स लो, शुरू तो करो।
पापा, बड़ी वाली अलमारी के ऊपर से मेरे गरम कपड़े निकालने हैं और लंबी लैडर लगेगी।
हाँ, उसका भी इंतजाम है। ओ, आओ बड़ी सीढ़ी लगाते हैं।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The outlook going forward and the strategies that investors should focus on. In this kind of a scenario, we have been quoting for quite some time that short-term or credit accrual-based strategies seem to be the best fit for an investor seeking exposure into fixed income. Ultra short-term kind of strategies also would probably be a better suited investment avenue over liquid funds where the yields are at abysmally low levels and we believe will continue to remain that way going forward. Should one look at duration funds like gilt and bond even right now? Well, we believe that these funds come in with inherent increased volatility given the longer nature of the duration that they have, and therefore a buy on dips could be a potent strategy, probably as a
Financial requirements are likely to grow over time, and even though your income may grow at a steady pace, inflation will take its toll. Traditional forms of investments such as simple bank fixed deposits or investments in gold may not help you realize your dreams and goals. How do you derive the maximum benefit from surplus funds? How will your dream of buying a car, going on a holiday, or buying a house be realized? Mutual funds might be the answer. What is a mutual fund? A mutual fund is a collective investment tool that pools together money from many investors. These funds are invested by a professional manager in various companies after carrying out considerable research. Mutual funds allow an individual to take part in the stock market without having to monitor its movements on a regular basis. The fund manager takes your money and invests in a wide range of stocks and fixed income investments or debt. With the technique of diversification, it is possible to counter market fluctuations and minimize risk. So, if a particular group of stocks in a portfolio does not do too well at a given time, there is a possibility that the loss is balanced or minimized by better performing stocks in that portfolio. Once invested, you are given units in the fund based on the amount invested. These units are easily redeemable, which means that you can liquidate these units simply and quickly. Net asset value, or NAV, represents the value of one unit of your investment after all fund management fees are paid. NAV multiplied by the number of units gives you the value of your investment. You can invest a lump sum or through a systematic investment plan. In summary, the benefits of investing in a mutual fund are professional investment management, increased diversification, liquidity, ability to participate in investments that may be available only to larger or institutional investors. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello friends, as part of our continuous endeavor to be closer to our investors in order to share our market views on a real-time basis, we have started with a series of interactions that we will have with you on a monthly basis. As part of the first series, I'll be sharing the debt views, broadly the views that we have for the financial year FY16. We have seen a meaningful reduction in rates across various tenors of around 100 to 125 basis points in the last 1 year. The fall in rates that we have seen in the last 1 year was obviously aided by a lowering of inflation and inflationary expectations, a lowering of the current account deficit numbers, sharp disinflationary forces that we saw in terms of commodity prices, as the fact that government's adherence to fiscal discipline has driven a lot of comfort in this system, both from an inflationary expectation perspective as well as from a RBI monetary management perspective. As a result, we have seen the Reserve Bank of India already having cut rates for short-term funds as well as the corporate bond fund vis-a-vis what we have seen in the last 12 to 24 months. Hence, we think that investors who are looking at various options of investments into debt products, depending on their risk return profile and depending on their investment tenors, can decide between these intermediate duration products as well as long duration products like the dynamic bond fund for investments that will most likely deliver good returns over the next 12 to 24 months. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Friends, the financial year 2015 has been a great year for equity investors. As the country heralds into a new dawn under the new leadership of Prime Minister Modi, and as the macroeconomic factors turn positive, we have also seen decent returns being made by equity investors in Indian equity markets. As we move forward to the new financial year, we move ahead with a lot of optimism as far as the economy as well as the equity markets are concerned. Our three pillars of optimism continue to be very, very dynamic and very vibrant. The first one is the macroeconomic factors turning positive. The second is the non-linear events, which is a fall in the crude prices, as well as a very robust governance, as well as focus on growth led by infrastructure, railways, defense, and so on and so forth. The third pillar is the earnings growth, and though the March quarter earnings are expected to be tepid, we expect in the next 3-4 years earnings to be quite robust. As we move forward, in the near term also, our view is that the markets might continue to show strength. The triggers for the near term obviously are passing of a few important bills which are likely in this month in the session of the parliament. We also expect the earnings upgrade as far as the country is concerned, and we believe that it's a matter of time before India's ratings are improved. And the most important thing, as we mentioned earlier, is the earnings growth. We also believe that the government spending, which was rather timid in the last financial year, should pick up pace as we enter the new financial year. With the fall in the crude prices, as also expectation of a slightly more robust taxation collection, we expect government spending led by infrastructure, railways, roads, defense to pick up meaningfully. This, along with a falling interest rate environment, should ensure that earnings growth trajectory comes back on track. We believe that that would be the biggest trigger as far as the equity markets are concerned. Thus, in short, from an Indian perspective, things look to be quite positive. From a global perspective, things have been a little volatile, especially earlier it was the Russian economy, and there was a wide swing in currencies with euro and British pound depreciating quite sharply. There were also concerns about stray countries here and there, including Greece. However, as we speak, things are starting to stabilize, and our view is that with a very easy liquidity scenario almost in all parts of the world, including Japan, China, Europe and US, money flow into Indian markets, both equity and debt, should continue to be robust. So even from a global perspective, things are looking quite good. In short, our optimism on the Indian economy and the Indian markets continue to be positive, and we would advise investors to continue to look at the Indian equity markets positively. Thank you and wish you a great financial year ahead. Happy investing and look forward to your support as always.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What is a mutual fund and what are the benefits of investing in a mutual fund? Your financial requirements are likely to grow over time, and even though your income may grow at a steady pace, inflation will take its toll. Traditional forms of investments such as simple bank fixed deposits or investments in gold may not help you realize your dreams and goals. How do you derive the maximum benefit from surplus funds? How will your dream of buying a car, going on a holiday, or buying a house be realized? Mutual funds might be the answer. What is a mutual fund? A mutual fund is a collective investment tool that pools together money from many investors. These funds are then invested by a professional manager in various companies after carrying out considerable research. Mutual funds allow an individual to take part in the stock market without having to monitor its movements on a regular basis. The fund manager takes your money and invests in a wide range of stocks and fixed income investments or debt. With the technique of diversification, it is possible to counter market fluctuations and minimize risk. So, if a particular group of stocks in a portfolio does not do too well at a given time, there is a possibility that the loss is balanced or minimized by better performing stocks in that portfolio. Once invested, you are given units in the fund based on the amount you have invested. These units are easily redeemable, which means that you can liquidate these units simply and quickly. Net asset value, or NAV, represents the value of one unit of your investment after all fund management fees are paid. NAV multiplied by the number of units gives you the value of your investment. You can invest a lump sum or through a systematic investment plan. In summary, the benefits of investing in a mutual fund are professional investment management, increased diversification, liquidity, ability to participate in investments that may be available only to larger or institutional investors. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello everyone. Let me begin with the Monetary Policy Committee decision which voted in the favor of a status quo, and that was unanimous in nature. This was largely in line with market expectations. So what did change was the reverse repo rate, which was increased from 5.75 to 6%. So effectively it means that the corridor between the repo and the repo, which was at 0.5%, now stands at 0.25%. Why was this required? Couple of reasons. A, the overnight rate, which is the rate at which the interbank transactions happen, had gone way below the repo rate and was trading at around the reverse repo rate. This could have meant an implied easing of rates, which is something which we believe RBI could have been wary of. Number two, there is an excess liquidity in the system right now, which we believe RBI wants to gradually drain out. Is it likely to completely choke the system in terms of liquidity? The answer is probably not. But I think this band or the narrowing of the band would effectively mean slightly more orderly movement, especially at the short end of the yield curve. The markets obviously were expecting a status quo, so the impact was fairly muted as far as the short end of the yield curve goes. We saw an yields increase marginally in the band of about 5 to 10 basis points. The government securities market, or the G-Secs as we call it, had the biggest impact in terms of quantum of price fall or the yield rise. Now this was largely given the outlook table to us by the Monetary Policy Committee, which basically sees some upside risk to inflation. Of course, the FY17